Hi traders, it's Roberto. In this tutorial, I'm going to go over several trading strategies, methodologies that I use. And the first one is the false break. Okay, so let's look at false break. Now, I'm looking for a support level that cannot be broken. That's what I'm basing this trade on. So, and I need to be looking at least 3 or 4 days of activity. So let me just look at this chart on the pound yen. Now I just wanted you to notice one thing. So I pick a level of support, which is, let's say, here. Normally what I like to do is draw a line at the body of the candle. So this is 1 day, and then the market went up and then it came back down to where a previous support. Now notice this candle here. I don't know if you can see it because it's being blocked by the, let me just remove the vertical line so you can see it better. Period separators. Notice this line here. This candle tried to break a previous support and closed above the support, and then what you do is you enter a buy on the next candle. Okay, this is a supply demand indicator, so it's helpful to have this indicator on your chart, and it'll make it a lot easier to spot these support and resistance levels. And then here it is again. We found support, 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 and then this candle tried to penetrate this level again, and it couldn't. And further stochastics indicators were oversold. Let me highlight those. Stochastics indicator down here. One indicator is not quite down to 20, but it's good enough. They're both oversold. So when price action, you don't rely on stochastics for oversold or overbought conditions. They're used for confirmation on what's happening with price action. So here is the candle that tried to penetrate again for the second time at a supply and demand level, and it closed above the support, and you would always enter a trade on the next candle right there. Okay, so that would be your entry, and the market took off north over 200 pips. Okay, now the same thing is happening again here. This is a resistance level, and price is bouncing off these resistance. So we're going to draw a line at the support, rather at the resistance level, and see if price can shoot back up and close below the resistance. However, if price manages to break above this resistance and the body closes above this level of resistance, then we'd be looking to buy. Okay, let's look at another chart. This is the pound US dollar, and we went over this, I think, during the webinar today. Notice this large red candle, and you would be thinking, well, this is a good area to sell. Why? Because it broke a previous support, and you would think, well, I'm going to go short. But notice when the next candle would not break below that long candle. It actually turned into an inside candle, which is called an inside bar. So you would wait. Now this is on the 4-hour chart. This would look quite different on the 1-hour chart. But on the 4-hour chart, we had an inside bar, and you're thinking, wait a minute, this run may be over even though it has broken a previous support level. And stochastics looks to be oversold. Okay? And so we wait, and we notice that this candle tried to penetrate below the support. This is now a support level, inside bar. And this combination is one that I really enjoy finding because it's a 3-candle combination. You have one candle, inside bar, and a false break. Okay, here it is again. One large candle, inside bar, false break. Not quite a false break, but it's still qualifies because it tried to break above the body of the candles, which was the support, the resistance, and it failed, and you would sell on the next candle. Okay, right there, you would sell on this candle there. Here, this is a perfect example of an inside bar and a false break, and you buy on the next candle. The only thing is that this was in between sessions and it took so long, it took hours, 12 hours before the market responded to this false break. But it did eventually. Okay. Stochastics indicators oversold, false break, enter a candle on this candle, north. A lot of patience on this trade. You'd have to wait till the market after about 4, 8, 12, 16 hours finally turned around. Excuse me, before the European session. Okay, let's look at another chart. On this chart, the Australian-Canadian pair, notice that price shot up, and then we had a color change candle. And you would have entered a trade here, went 8 pips below and made some pips. But remember that I had mentioned that price tends to retest the highs and lows. So what did it do? It turned around and retested the previous highs. But look what happened. We had a false break. This red line here was the resistance level. Tried to break the resistance level but failed. It closed inside the resistance level. And you would automatically place a sell on the next candle. And there's your trade. Okay. Then what happened? We had 2 candles here. And I know in hindsight this looks very easy. When you're actually in the trade, it's a little bit intimidating. But if you qualify the trades and you look for several reasons to take a trade, then it's not that difficult. Okay. Market sold off and we had several red candles, and all of a sudden we have a color change candle. And price yet to print 8 pips above, didn't do it yet until this candle. But you could have taken this trade either 2 ways. You could have taken this trade 8 pips above, which you would have entered here and taken this trade going north. Or let's say you missed this trade, you didn't see this candle, the 8 pips, but you saw this false break. Notice this is support, candle tries to penetrate the low, stochastics indicators are oversold. You enter a trade a little bit late, but it's still valid right here. And the markets went up. It was like a 40, 50 pip run until it hit resistance. Again, here we go again. We have a color change candle, and you would enter a trade 8 pips below. But what happened? The market again retested the highs. Your stop loss needed to be above the swing high, and we had another false break. Here's the support, rather resistance. Price tries to penetrate the resistance level and fails, and you enter a trade on the next candle right there, and there's your move down. Okay, nice 88 pips run. So using a combination of color change candles and false breaks, it's difficult to go wrong on these trades. Okay, and there's 1, 2, about 6 red candles followed by a color change candle, and you would enter, this is the color coded system, you would enter 8 pips above, and there's your trade going north. Notice too also that the stochastics indicator is oversold. Okay, so that is the false break. I will accompany this video with a lot of screenshots on false breaks. And let's move on to another trading strategy.